very large, well, 40% correction in equity markets, S&P down to 3,000. What does that do? Everything unravels, and it'll only be stopped by massive fiscal and monetary printing, probably early next year, which then leads you into the next phase, which will be a highly inflationary phase, and it will be pretty short-lived, 25, 26, 18 to 24 months, because what kills that? You'll see a rapidly falling dollar, inflation resurging to double digits. What do the bond vigilantes do? So long-term bonds, which central banks can't control, the market controls them. You'll see long bonds, 10-year treasuries yielding over 10%. What does that do to an indebted system? That's when the real unraveling begins.
On this episode of the What the Finance podcast, I have the pleasure of welcoming back Simon Hunt. So, Simon, thanks so much for coming back on the podcast today.
Well, my pleasure.
And look forward to, we've had a few technical issues, so I think we're happy that things are finally working well. But my first question, so in our previous conversation, it was at the start of the year, you were talking about your expectations of a market crash in 2024. Is that still what you're expecting? And what else are you seeing in the markets?
What else do I see? Well, first of all, to answer the question, yep, we're in the throes of a recession in America, if it's not already started. The Q2 GDP figure, I fear, was heavily inflated. Just the GDI number hasn't come out for Q2 yet, but if you look at Q1, GDI came in year on year at 1.6 and GDP at 2.9. So there's some manipulation going on in the GDP data, because certainly what's going on in the real economy does not represent what the GDP number is saying. Inflation is taking its toll on consumer spending, despite all the denials by government officials. Employment, which is a laggard indicator anyway, is starting to fall. And probably, if you look at company statements, at a far faster pace than is being picked up by the Bureau of Labor Statistics. And then you look at what's happening in Japan with the yen carry trade, which is beginning to unwind itself. You've got a stock market that, on any sensible valuation, is overvalued. And so far, the growth has really been dependent upon 6 or 7 stocks. The rest have basically gone nowhere. And then on top of that, you actually have pretty perilous financial system. And overriding all of what you see in business activity in the financial sector is a really tense and muddled world where at any moment we can see an escalation of the war both in the Middle East and in Europe. Then you come back to domestic politics in America. of which I don't pretend to be an expert, but I listen to friends. And basically, however you like to describe them, the neocons, or the financiers behind the Democrat Party, are their decades-long objective has been to dismember Russia, to gain control of its natural resources, and to gain control of the heartland, which, you go back to 1904 to Halford Mackinder, said he who controls the heartland controls the world, which is exactly what this group of people want to do. On the other side, you have the Republican camp, who are much keener on making America great again, to stopping the stupid spending that the Democrats have pushed on the American economy, and on cutting back the overseas military bases. And in other words, don't want a war in the Middle East. I'm sorry, don't want a war in Europe. So that's basically where we are today. And I think that stock markets might have a little bit more on the upside, but precious little. And basically, what we see happening between now and the early months of next year is around about a 40% fall in global equity markets, which will impact other markets like base metals as well. I think that there is a huge risk that before the end of September, either, if not both, that we have an open war between NATO and Russia, and that we have a big cyber attack, of which what happened, was it last weekend, was only a dress rehearsal. And what does that do? Shuts down banks, shuts down aeroplanes, shuts down everything. What emerges out of that? We have to wait and see. Does it mean, well, let's not go into that, but so all I'm saying is that the risks are far bigger than the rewards over the next 9 months or so.
Yeah, a lot to unpack there. So you mentioned the neocons want control over the heartland. What specifically is that? Is that sort of the Midwest, or is there somewhere else you're referring to?
The heartland is what Halford Mackinder described as Central Asia. And he who controls Central Asia controls the world. And it's been a long-standing policy of America, going back to Brzezinski, that America must prevent any one or two nations from having control of the heartland. So what he feared, and advisors since him, is Germany and Russia getting close together So deliberate attempts to break that, i.e. Nord Stream 2. And then China and Russia cementing into a deep-seated strategic alliance has really been the last straw. And then on top of that, as the policy of BRICS is quite clearly to establish a zone in which the dollar does not participate in trade or investment. And a paper that was produced jointly by a Chinese economist and a Russian economist comes up for discussion at the BRICS summit meeting in August. And that paper, the new currency proposed in that paper, is based on 40% gold, 60% local currencies, members of the BRICS, but all of those in turn linked to gold. So gold comes back into the monetary system for the BRICS empire. Who is going to buy a fiat currency, i.e. a dollar, which is basically based on issuing debt all the time? So what I'm saying is, if the BRICS new currency did mature, it would put a huge spanner in America's hegemony and the domination of the US dollar in global finance and investment. Big stakes. Big stakes, and I think that big enough to go to war for, unless there are sensible people in an American government that see the writing on the wall and see whether the two parties can join together. But for the moment, I don't see it.
Okay. The one challenge I have with a gold-backed currency, especially from the BRICS, is how would you audit that they actually own the gold and it's not similar to maybe the end of the Bretton Woods period where there was concern that they were printing money without the actual gold backing it.
Well, I think we start from a premise that the gold that China and Russia holds is several times larger than is the published figure. So Chinese people, including financial institutions, hold around about 25,000 tons of gold, which has been bought directly from the Shanghai Gold Exchange since its formation in 2002. And then the Chinese government, through different ministries, also holds at least 25,000 tons. I mean, I've had it confirmed by a friend of mine who actually visited a PLA warehouse at headquarters, so clearly one of their biggest, and went into the warehouse and was stunned by seeing gold bars stacked from floor to ceiling. So again, if you go back to 1970s, 1950s, and calculate the imports of gold, you come up to a big figure. The problem with that analysis is that anything that the PLA imports is not recorded by customs.
Okay.
So I think that the first phase in this is that China will say, our currency is supported by the gold which our people own, and they will probably announce the figure. That's my bet.
Okay. Yeah, it's a I think it's something that's been talked about for a while, but we still haven't seen much progress. Is it just that it's a very complicated thing to put into place? There's lots
Oh,
of moving
it's not
parts.
all going to happen overnight. It's
Mm.
step by step. It probably takes 2 years, but what we will probably find from the August BRICS meeting is the roadmap is laid out. And when people see the roadmap, then many people will move in that direction, which is why I keep coming back. How much of a loss of hegemony and the dollar's domination in the financial system is America prepared to accept?
Well, there's talk from people within the actual country that it would be a good thing for the average person and for you know, job creation, for exports. If you actually, you know, de-dollarize the world, dollar became weaker. Do you agree with that?
Providing it doesn't become a stampede.
So the hard
Because
thing
if you
is, yeah,
start unwinding the huge positions that the financial system, including the commercial banks, have, basically nearly all of their trade is based on dollars. The consequences can be very rough.
yeah, I imagine similar to everyone trying to get out of the stock market. If everyone's running for the door at the same
Yeah,
time, it wouldn't be
that's
a
right.
good scenario.
Exactly.
Hey everyone, sorry for interrupting. I just wanted to extend a massive thank you to you for listening and tuning in, and for your support over these 3 years. So we've had, you know, hundreds of guests that we've welcomed on the podcast. We've had millions of views. We've hundreds of thousands of different people listening in. So I just wanted to thank you. You know, I started this as a student. I'm now currently working, and I've always done this on the side just because I have a passion for it and I've enjoyed it. And probably similar to yourself, you listen to all these, you know, different YouTube channels and podcasts of people listening to different guests. That's how I started, and I just wanted to sort of take the plunge and be able to have the opportunity to speak to these people, and you've made that happen. So thank you very much. Just myself, don't make any money from this, and it's really a passion project. So thanks for supporting that passion of mine. If you wanted to support the channel, all I ask is if you could like, subscribe, or even comment, you know, positive or negative feedback. I'm always willing to take constructive criticism. I'd really appreciate that. But otherwise, thanks so much. If you can believe it, only 14% of our listeners actually subscribe to the podcast. So yeah, if you can, great. If not, no problem at all. Thanks for listening. And yep, let's get back to the show. So yeah, at the start of the conversation, you're talking about the US election, the different parties, and you're saying that when the Republicans would come in, they would potentially reduce the deficit. But that does seem to go against, I guess, what Trump did in the first term and potentially what he's talking about now. It seems like they're quite populist and, you know, similar to probably the Democrats, and they could actually keep spending as is. So why do you think that might not be the case?
I'm not sure that I actually said that Trump would cut spending. I think he will cut a lot of, from what I'm told, he'll cut a lot of spending, like subsidies on EVs and renewables. The two big acts of spending acts. I think he'll cut a lot of the stupid spending out very quickly. To what extent that's going to lead to a better balanced budget, I have no idea at all.
Do you think there's a way for the US to sort of go off a deficit, or at least reduce it to a 1 to 2%?
One would hope so, but I doubt it.
Yeah, agreed. So you mentioned about that we were talking about the heartland before, and sort of Southeast Asia, and why that holds a lot of power to the world. So is that why there's this large conflict that looks like it's going to arise from the South China? Is it China, Southeast Sea? Is that sort of why China's going through, and that's the same as why the US is trying to prevent it?
Well, I think that quite clearly both parties look at China with enmity, as not just as a competitor. And they put forward arguments of government subsidies, etc., etc., etc. But actually, the reality is quite different, which is that China has built, over the last 20 years, the most efficient supply chains anywhere in the world. I know this from all the factory visits that I used to make until 2020. And not only that, but their use of robotics and other automated machinery is several times greater than in any other country in the world, including America. So it's a very efficient manufacturing system. Why is it that they can produce a low-cost EV at about $9,000, and the cheapest in America is 30 odd? Then you look on the capital cost, the running cost of a nuclear plant. It's an order of magnitude cheaper than in America. I mean, China has the advantage of a huge domestic market, but they invested in creating a very efficient manufacturing system, bringing in the latest technology. I mean, I can remember in the mid-1990s going around factories when the day happened, the word came down from Beijing, you've got to get your act in order because we're joining WTO. From that moment onwards, not only did they open their books, but the questions were, where do I get the most modern machinery? So it's been, if you look at how China has matured from, first of all, producing cheap goods, garments, cheap everything, to now, what are they producing? Some of the most sophisticated machinery, products. I mean, what I think a lot of the policymakers miss is that if they shut China off from their markets, I mean, China dominates markets from simple things like light switches to highly sophisticated products, EVs, etc. And on the military complex, a lot of what the military establishment need to produce their equipment, whether it's missiles or planes or guns or whatever, where do some of the most important parts come from? China, such as rare earths. So we either end in a war, or we end in probably after a big crisis, heads are knocked together, and we come out of a much more sensible world. But that's going to it's going to take, where are we now, 2024, 7-8 years.
Yeah, that's my concern about if there was a US-China war, that I think there's talk about if in a kinetic war, the US would run out of ammunition in 5 or 6 days. And while the manufacturing capacity is increasing, it isn't at the level where it could just completely turn into a war economy.
Yeah,
Whereas I think China could do that a lot quicker.
yeah.
Okay. So do you see there a likelihood of a world war, or do you think it's sort of not currently on the table as a more Cold War?
I think that, I mean, frankly, the current conflicts, whether in the Middle East or in Europe or even in the Pacific, can escalate into a war, a real war, on any day. I think you're asking an extremely difficult question. I think this is a risk, it's not a forecast. I think the bigger risk is the Middle East. Why? Because I think the real reason that Netanyahu came to Washington was to get America's support for a hit on Hezbollah, both in Syria and Lebanon, and thus a hit on Iran. As everybody in Israel and a lot of people in Washington describe Iran as being the head of the snake. So if Israel wants to rid itself of Hamas, Hezbollah, Houthis, etc., they have to go to the head of the snake. Problem with that is that Iran is prepared for it.
Yeah, there's talk that they're not too far off having nuclear weapons. So I guess if you
Well,
want to do it at any time.
That's very debatable. They don't need the nuclear weapon because they've got a vast array of missiles, including hypersonic missiles. You only have to go back to when Iran retaliated against Israel after Israel had demolished its consulate in Damascus. Most people in the West said, oh, Iran had these 300 low, slow-flying drones, without understanding that actually they were pure decoys designed to be shot down, because following them were 4 ballistic missiles designed to evade all of Israel's defenses and, in fact, America's, and designed to hit without destroying 4 military targets. Each one was successful.
Okay. Yeah, it definitely seems like there's a increasing risk in the world. So it's sort of what you were saying before, that markets could go up a little bit, but you see there's more likelihood of the downside risk. And I think a lot of people would agree
I
with you.
think either the markets have topped out, or there's a little bit more to go on the upside, but I mean less than 5%.
And do you think it'll be like a financial sort of system correction, or is this just going to be related to the economy, related to geopolitics and other factors too?
I think it's I think what we see over the next, where are we now, 9 months, is a very large, well, 40% correction in equity markets, S&P down to 3,000. What does that do? Everything unravels, and it'll only be stopped by massive fiscal and monetary printing, probably early next year, which then leads you into the next phase, which will be a highly inflationary phase, and it will be pretty short-lived, 25, 26, 18 to 24 months, because what kills that? You'll see a rapidly falling dollar, inflation resurging to double digits. What do the bond vigilantes do? So long-term bonds, which central banks can't control, the market controls them. You'll see long bonds, 10-year treasuries yielding over 10%. What does that do to an indebted system? That's when the real unraveling begins.
Yeah, and you talked about the Japanese unwinding their sort of their investments in the US because of the potential, the yen finally going down. So that could be another.
Mrs. Watanabe wants to put her arms around her money.
And yeah, that's something that we've seen has a large impact sort of on every asset class globally.
Yeah.
So,
I mean, I saw a figure that it's over 20 trillion, the carry trade, yen carry trade. It is over 80% of America's GDP.
yeah, so it's a lot of money. So Simon, thanks so
Yeah.
much. Yeah, so thanks so much for your time today. Really appreciate it. And then my last question is, what is one message you like people to take away from our conversation?
A time to take risk off the table. And sometime around mid next year, time to put risk back on the table, but don't stay too long to be the last guy on the dance floor. And finally, if anybody wants to get hold of me, it's simon-hunt.com.
Perfect. I'll put that in the description below. But Simon, thanks so much for coming on today.
Pleasure. Pleasure.
Hey everyone, thank you for listening. I really appreciate the support. If you've got value out of this, I'd really appreciate it if you could like, subscribe, or comment, good or bad feedback. I'm always open to that. But it really helps with the channel. As I said before, only about 14% of people actually subscribe to this channel. So if you were to that, it would really help. It could mean we could continue to grow. If not, thanks for watching and see you on the next show. And you also might like this video right here. All right, thanks again.